info brought to you by OptionsHouse. Jumpin' Joe Flash, how you doing this morning?
It's a gas. I was born in a crossfire hurricane.
If that is not a level of enthusiasm, I want all the people in the chat room to join in with that. It
Oh,
is really
let me rephrase.
okay.
No, I'm not going to. Just kidding.
Plans for the weekend? Are you is it Boxing Day over here in the U.S.? Are you going to return all those Christmas presents, all those red sweaters and stuff you got? Are you going to be returning those over the weekend?
I think my mom knows that I will return everything, so she doesn't tell me where it's from or leave a receipt. So I have to keep it all.
Okay, all right, all right.
Maybe I can sell it on the street.
Big sports weekend in my family. What a change here.
Oh, why don't you tell us about your weekend, Joel?
Well, big Saturday night. Big Saturday night plans. Got tickets for a Michigan basketball game at 6:30. So head up to Ann Arbor early, grab some dinner, and then upon returning home after the basketball game, we are going to watch the Buffalo Wild Wings Bowl. So we're going to have about 7 to 7.5 hours of sports. And my lovely wife Lisa is going to be accompanying me during the entire time. My daughters, who are big sports fans, cannot believe it. So, Joe, do you want to join me for that sports extravaganza? I have 2 extra tickets for the Holy Cross game.
I would love to, but I'm actually pretty busy all weekend, I have to say. We have some friends coming in from out of town ahead of the New Year's celebration. So we will be showing some of the out of towners around lovely Metro and downtown Detroit. And so no, I won't be able to join you, but thank you. The one time you actually invite me over, I can't come.
Okay. All right. Well, Dennis, let's move on to the markets. If you're done, I'm sure you're very busy with that 8 o'clock open there, but
Oh, yes, very busy. We are up one cool point on the S&P futures. We've had a wild 4.5 point range here overnight. We're trading almost at the highs though right now, 1837.75. So the grind north just continues here, Joel.
I took a look at it when I got up early this morning, 5:30, quarter to six. Dog kept hopping off the bed, so I just figured I'd get out and take her out.
Yeah.
And it was down 2 points. I'm like, it's red. I gotta buy it. And
Did you?
yeah, I did about a little bit. Now I have to
Oh.
wait another 3 days for it to go up 6 points. But was leaning on the pivot area, 1834. Only got 3 ticks lower than that. We are trading 1 tick off the all-time high here, so we'll keep an eye on that. That's the only number we have in the book, 1837.75. That was Thursday, an all-time high. Dennis, we were talking a little bit about the gold stocks yesterday, and I made the astute observation that gold is broken down here and broke down below the $1,200 level. Let's take a look at that real quick. What a terrible year for gold, Dennis. What's your outlook for gold in 2014?
Again, same story here. As the market continues to grind its way north, gold seems to continue to grind its way south because that's the defensive trade, and nobody wants to own gold right now. They all want to own equities. They all want to own Twitter. Maybe not today because it's getting downgraded, but that seems to be the trade. It's risk on, and gold is just obviously down usually with that as well. Although gold's only down 50 cents today, Joel.
You do have an interesting level here, though. Yesterday's high, 1540. Today's high in the session, 1510. Potential double top. If you take that out here, there's an opportunity to trade up into the 1220 handle. Looking on the downside, you made one, two, three, four lows under the $1,200 level, and then buyer stepped up yesterday to defend the $1,200 level. So if you're looking for a little bit more of a swing trade here, willing to risk 10, 11 bucks down under 1,200, you might get a little pop up to that 1230 level. And moving on to crude oil, it's quietly made its way back near the $100 level.
Yep.
Couple days of consolidation. What is your outlook for crude in 2014?
Just hanging on out underneath that $100 level here. I think we could see 100 by the end of the year here, though, Joel. 99.62, only
Wow.
38 cents away. I'm going out on a limb here.
Quiet day yesterday, only a 65-cent range in crude. Made a new high only by 7 cents. So let's keep an eye on that 99.77 high. That coincides with the high that you had back on October 28th, 99.76. And then if it does get to there, I mean, the psychological $100 level is a level, but according to the charts, there's really not a lot there. So quiet day though, only a 65-cent range in crude yesterday. And just going back to the gold a little bit, we were talking about how your ABX. Do you still got in your portfolio, Dennis?
Still got the Barrick, just a little bit, but we still got the Barrick. It's all about diversification, Joel, in those portfolios.
So
You
you
gotta
got,
have a little bit of
and you
gold.
know what Dennis means by diversification? Is that he has to have one loser in his portfolio.
Yeah.
He has so many
Cool.
winners, he has to
Yeah.
diversify. But what about this? Gold crashed under 1,200, and this didn't even come near
It's
the
been
low.
quietly one of your better performers here lately. It was one of the worst performers, but they are cutting the cost of production. They're trying to get that down. I think Barrick's being more aggressive with it than maybe even some of the other ones here. They realize that look, if gold goes down to $1,000 here, we're all going to be in a world of hurt. So we need to start cutting back that cost of production. I think they are trying to do it. But regardless, the charts don't lie. Take a look at the charts. We had the bottom in early December here. And even though gold made new lows, like you said, Barrick did not. And it seems like every time gold starts to get a little bit of life, Barrick's actually starting to be the first one to rally here. So it's looking like Barrick is the one to own. Best of breed right now here, Joel.
Okay, just on a quick note, I was discussing with Jeff Goldman, who we had as a guest on the show, a couple of weeks ago, and I was just asking him. They has a lot of different traders, and I was just we were discussing what are some of the most profitable stocks, of his entire group, and I was a little bit surprised that Nugget was one of them, and I guess it's the Bull 3X gold miner shares. Looks like they've been pretty quiet lately, but they did have some nice moves, so it's a momentum thing. So if you're trading this and you want to get 3 times your bang for the buck here, Nugget NUGT. Do you ever trade that, Dennis?
No, and just remember that these things are levered and they're daily. They rebalance daily here. So it's going to give you the return for the day. If you put this in your portfolio, it's not going to return the gold miners 3 times over the next year. It's going to do it every day. These are trading vehicles. These are not investments here. So I don't like, obviously I don't put anything like this in my portfolio. If I really want to get some leverage, I really was bullish gold that day, maybe I would, but I'm not a big fan of any of those levered ETFs
How
for
about
three
that?
times.
How about that chart formation here? A little bit of a rounding bottom here. I mean, risk reward. Where's it trading at? 27.5, 28 here. Perhaps put a little bit in there. Risk down to the low of the move. The recent low of the move has been 24.14, so it could just be like the best buy of 2014.
My charts just crashed on me here, so this will be interesting. Trying to bring them back up here. I'm imagining it looks like the gold chart, though, since it's 3 times, kind of. What are you looking down there, that whole 24 area where it
Yeah,
bottomed multiple
yeah,
times?
yep.
It's trying to show some life here. I mean, it's like the Barrick chart here a little bit, too. So Barrick obviously bottoms, trying to show some life. These miners aren't completely dead here, even though gold is sitting near the lows. So they're starting to get a little bit more interesting, but until obviously we start to get a little bit more fear out there in the market and the overall equities, I just think this gold trade is going to get some bounces here and there, but the overall trend is still not your friend. But I'll tell you, let's go to more exciting stocks here
Yeah,
because I'm
okay.
getting bored
Sorry.
with all this gold crude that isn't moving around. What about Twitter? Because this stock is absolutely insane. You can complain and say, oh, there's not much going on. I'll tell you, everything is going on in Twitter. That stock is just nuts. It was up another $4 and some odd yesterday, made a high 74.73. It is pulling back here today. Brent, you got the report because Macquarie is downgrading the stock today.
I'm looking at it right now. I just wanted to mention almost 83 million shares traded in Twitter yesterday. The SPY traded over 63 million.
So it was the most highly traded vehicle yesterday, basically.
By a good margin, yeah. So it looks like the downgrade, the Macquarie analyst just pretty much attributing the 40% run up with no change in fundamentals. He says actually this is going to be the shortest downgrade note you've ever read.
Is that what he said?
Yep.
Just pure on valuation.
Yep.
It's run too far, too fast, and he's taking some off the table, basically, or telling his clients to take some off the table. What's the price target?
They're at $46.
Whoa.
Yep.
So they're way down. So
We
they're not raising that up. They're not chasing like all the other analysts, chasing this price up. They're holding firm down at 46.
Yeah, and Joel asked me earlier what's Goldman got on Twitter. They actually got the $46 target too.
Do you have the other price targets in front of you right now? Do you have
Yeah, I can. Let me pull them up real
Yeah, hunt
quick.
that down because I'm curious where everybody is here on Twitter right now. Because I've seen a few price target raises. You know what happens? They're down at 46, and we'll upgrade the stock and we'll just quietly raise the price target to 80 so that they don't look so
It
bad.
looks
It's
like.
always these analysts chasing around the
Oh
price.
yeah, it looks like the average target is below $44 right now. I don't know, just kind of estimating that right now. Looks like we got a street high 65 CRT Capital's got a $65 target on there. Looks like the low is around $30, and that is um, actually Hudson Square, tier 3 or 4 from. They got a $20 rate target on it.
Stop.
If these analysts were like traders, I mean, they would just get ripped on and laughed at so much. I mean, how can you come out when a stock is trading at $72 and say you have a 46? You're wrong. You're obviously wrong. I mean, why do if I had a 46 price target on something and it traded 46.01, I would say, okay, I'm raising my price target to 46.02. I mean, I just don't understand. Are they sticking to their models that much where they let something go 35? Because what do you tell a client? Like, let's say the client's following your recommendations. Dennis, are you there?
How do you? Yeah, but I'm just looking at it here. How do you even value something like this? Like, I don't even know how you come in. Obviously, you can look at like growth and numbers and users, but really, when the company doesn't make money, it becomes so tricky to even figure out a valuation for this. Um, it's just hard. Like you think even back to the tech bubble, and I don't know if this is that carried away or not. It does have a lot of users, so it's not like it's just some small little Mickey Mouse company that's worth $39 billion, but at the same time, it's so hard to use valuation techniques to value something like that. It's like traditional methods. You got to look at growth, and then you got this herd mentality in this thing right now. I mean, it's got the momentum. There's nothing that's got more momentum than this. 12 trading sessions ago, this was a $45 stock, and it hit $74 yesterday. So just it's been an incredible run here, and the momentum is going to turn here eventually. I just don't know when. I thought it was yesterday, maybe. Off the bat, it opened, even if you look at the trading action from
Yep.
yesterday,
Right.
it opened up at 73.39 or something like that, and quickly gave back 4 points. And I was like, well, maybe that's it. Maybe that's the gap open. It filled the gap, and maybe this is the turn. And then 2 hours later, it's right back up making new highs again. It's just like every time this thing pulls back, the herd comes in to buy it. So here we are. We got a downgraded day with Macquarie. It's down $1.80 here in the pre-market on 522,000 shares already. But who knows? They're crazy enough. They're buying this thing again. I don't know when this stops, but it's going to stop here soon. I just don't know where or when.
I just was doing a quick article for the Benzinga site, and so I saw the open, I saw the high, and I'm like thinking, if it opened higher, continued higher, if it can go down and take out yesterday's low, well, the previous day's low, 65.56 for a key reversal. But then I saw it was down $4, and I'm like, this thing's not going to go down to $8 today. And as I'm writing the piece, it just took off. Dennis, are
Yeah.
you participating in this action at all? I mean, this
I
is
traded it a couple days ago, but not really. Like I mean, when I'm trading this thing, I'm trading like a couple hundred shares of it, which is just like fool around money. I'm not hitting this with real money here. It's just too much like a casino stock right now. I mean, it can go anywhere. You're right in the stock, you buy that open, boom, you're down 4 points in like 20 minutes. So that's like 5%. But we don't even look at that. Literally losing 4 points in 20 minutes. And then if you say, oh well, it's below 70, maybe I'll try to short, and you lose another 4 points. I mean, you can make 4 points in a hurry, but why not just go to the casino and put your money on red and spin the wheel and see what happens? It's so hard to predict something like this, especially when the trading herd's in it. And you can get run over here in a hurry. It's very hard to control risk. And you know me, I'm like a risk manager. That's all I'm about in my trading is like conservative. I try to find, hit base hits. This is exactly the opposite of my trading style. Some people love the trading style. A compulsive gambler loves this trading style too. And if you can find an edge and if you're making money consistently on this thing, keep doing it. But if you're just starting out and you're looking, oh, Twitter, that's the one I should be trading because everybody's trading that. It's like a casino stock. It could go anywhere.
Pre-market low 71.57. We just hit that a few minutes ago here. I guess if you want to trade this thing and you're looking for a parameter on the downside here, just keep an eye on that pre-market low and see where it settles in. You still got a ways to go to yesterday's low 69.13. Also, just keep in mind you got I don't know what short interest in this. It'll be interesting to check that out on Barron's over the weekend. But you are going to compete with all those people that are severely underwater short. Then you got a whole nother crowd that's going to be shorting it again today off the downgrade. So that that's the reason it just can't get these big drops. Because there's so many people stuck short. I just came to the conclusion. I asked Brent when they're expecting earnings out, and I believe it's sometime near the end of January. So I think if you are going to take a shot on this, you just got to let it float up here ahead of earnings. Some people may want to take the chips off the table, ahead of earnings, because who knows, they could meet or beat by a slight margin, and they could kill it. That would be. And also when we were talking with Fari yesterday about when to take shots with these stocks, and a lot of times on the options he looks for a driver. And I'll tell you this next earning report or the first earning report for Twitter is going to be it's going to be a
Oh, it's going to
monumental.
be a huge driver. It's going to move probably 10, $15 off that earnings report in either direction here on what they say. Do we have a date? Do we have the actual date of when they're reporting?
I'll
Brent, do you
turn
know?
it over to my trusty newsman.
I can give you a bit of extrapolation based on when the date showed from that S1 filing. So probably January, the week of January 30th, we could guess.
About a month yet.
Yep, about a month we got.
That'll be an exciting report, though. One other stock, though, obviously Facebook too, which hasn't really been trading with Twitter nearly as much. It was before. It was kept getting pulled up here as Twitter kept rallying. Facebook was rallying with it. It's not really happening here the last couple of days on Facebook. We've been up basically $10 here on Twitter in the last three trading sessions, where Facebook had the big rally, but for the last 2 days, it keeps topping out in the mid 58s. It's had a high of 58.32 on the 23rd, a high of 58.58 on the 24th, and then yesterday I had a high of 58.38. So resistance starting to become very well defined in the Facebook.
And you were talking about some exciting trading action in that yesterday.
Yeah, I was trading this one. This one I had a little bit more control. I was leaning. I had a feeling, and especially with the Twitter sell-off early, I was like, well, maybe they'll pull Facebook down with it, because Twitter just opened and gapped and started selling off. So I started selling Facebook short. I think I started selling around 57.90, somewhere in there. And the reason was it opened up over 58 yesterday. And then right off the hop, somebody came in. They wanted to dump like 100,000 shares at 58, and they were like basically refreshing. I saw this guy a couple days ago too doing the same thing. I don't know if it's the same guy or if it's a girl. Like it could be a girl too, right, Joel? So we'll say girl. So we saw this lovely lady trying to sell $58 there a couple days ago, and she was getting done on her order. And yesterday, same thing. I saw 58 coming in for size. So it's somebody, some institution is wanting out, and it looks like, or maybe it's more than one, but there's definitely some big sellers there that are kicking in at 58. So then I'm watching, and then all of a sudden 400,000 go offered at 57.90. Somebody's getting aggressive, and I was like, oh, somebody really wants out. 400,000 share orders is huge on Facebook. So stock starts, and as soon as that order pops in, the stock sells off a little bit more because everybody's seeing that order in the book and they're selling it ahead of it. So I actually shorted a little bit ahead of it too. Figured might as well trade along with the herd that's all shorting it. I might as well just be along with it in this case. So I was leaning on the 57.90 area. I knew I was kind of double back because I knew there were sellers at 58 too. So I was like, I'll keep trying this from the short side. Twitter's going down. I'm feeling like maybe Facebook could lose a buck in a hurry. Then the seller drops down. The 400,000 drops down to 57.80.
Whoa.
And the stock comes down. And then the 400,000 share seller drops to 57.70. So it's obviously the same person. They want out, and they keep dropping their order there. That's when the stock falls down like 57.50. Keeps falling ahead as this guy lowers his big order. The stock's falling ahead of it too. But then he sits at 57.70. He doesn't really come down, and then starts to nibble up and actually takes him and then chews him out at 57.70. She gets done at 57.70. Lo and behold, another 400,000 though is sitting at 57.75. Market goes down a little bit, then comes back up, chews her out again. 57.75 gets done. Then there's another 400,000 at 57.80. Chews that out too. So literally just chewed through 1.2 million shares. And actually, that's when it went all the way back up in the 58 handle, maybe in the next 15 minutes after it chewed through that 1.2 million shares worth. But there's definitely somebody that is selling a lot of stock the last 3 days in this whole 58 area. So I don't know if they, are just sitting on huge profits in the run and they're just getting out of it for that reason. We don't know why they're getting out, but I can tell you there's somebody with big money saying, I'm taking off my bets in Facebook.
Okay, all-time high close 57.96, and then you've had two other closes right in that area 57.77, 57.73. So let's call 58 a critical level here today for Facebook. It's nothing on the charts. The real number on the charts is 58.58, which is the all-time high. Seller stepped in ahead of that yesterday. So looking for Facebook, the 58 puts might, if the market weakens up a little bit here, maybe, that might be the call on the weeklies. Who knows how much movement it's going to get. But on the downside here, 56.91 is the 2-day low. Yesterday's low, 57.37. So I'm looking for this thing to bounce around between 57 and 58. If get a close above 58, I think the move continues. A close below 57 here, and I think may give a little back, maybe get down to the $54 level.
And by the way, since we've been talking about Facebook, Twitter has fallen another dollar now. It's down at 70.92. So showing you how much this thing moves. We started talking about it about 10 minutes ago at 71.90. It's fallen another buck here. So it's now down $2.50 on that Macquarie downgrade.
Brent, we got any news on WPCS International Incorporated?
We do
Chelsea's asking about it.
Yeah, we do have a bit of news, and it's Bitcoin related. Yesterday, late last night, the company announced the public beta release of BTX Bitcoin trading platform.
Huh.
So, believe it or not, Bitcoin moving the stock's up 60%, I believe it was right now. I mean, it's a tiny company, but stock's moving huge this morning, up about $1.
Was that big gap down day 5 days ago? A gap down huge WPCS on some type of news, I would imagine. Went from like $3 to like $1.50, lost 50%.
You looking on the 20th? There's a huge move lower on the 18th. You're looking at the gap.
Yeah. What was it that day?
I think that was also related to this Bitcoin thing. I think there was a rumor a little bit earlier that they were going to be getting into this, and maybe the street didn't like it at first.
Maybe they had there was a rumor that I was working on their platform. And that's what, and then they
sent the stock spiraling.
Right, and then you got the consolidation here at the $1.50 level, getting a pop here in the pre-market, 265 high. If you go to the dailies, $3 looks like the level, 312, 317. Were the highs on the 17th and 18th, so that could be a stopping point. Dennis, what's your take on the whole Bitcoin craze?
Well, I know you get questions about this. I actually get traders or emailing you asking about Bitcoin, and I have no comment even on Bitcoin. I mean, this is something, again, this is just a crazy. I don't even know, where do you buy this thing, Joel? There's like sites online, I guess, that you can do. I guess maybe that's why it's WPCS.
That's the WPCS. Yeah, exactly.
Because there's no real easy way to go and just, I'm going to buy Bitcoin or sell Bitcoin. Or maybe there is. Maybe somebody in the chat knows. I've never even looked into
actually,
it.
I did talk to Kenny Wool about it, who works here in the Benzinga office. But I'm looking over there. Kenny's never in this early, so we can't have him on the show. But he made a trade in it, and I'll have to talk about it. He just was going to do it for like a short, for a long-term investment. He was going to buy it and forget about it. And he bought it, and it went up, and he sold it. And he said, he got a nice percentage on it. So maybe we can have Ken in as a special guest and talk about.
Yeah, and then we can talk about the Bitcoin trading if you want. But again, this is something that's very hard to value. I mean, we don't know, and there could be other digital currencies. Somebody could come out with another better digital currency tomorrow.
This is not something new, like the digital currency thing. It's just for whatever reason, Bitcoin caught on. There's like 1 million Bitcoin exchanges, Dennis, and they all have different prices. You go on two,
It's just
and
got to
there'll
get into the
be
arbitrage
could
of
be a
Bitcoin
40
here, and
point
we can
spread.
retire.
It's kind of like stocks, right?
It's kind of like stocks. You got to have 100 places to trade the thing.
So what do? You buy it and then you put it on your cell phone and then you go and you show your cell phone and you pay for things? Is that how it goes?
I don't know how that works. I imagine you gotta.
Anybody in the chat here? We're gonna wake up our chats here. Is anybody here ever purchased or used Bitcoin here? We will wait for an answer.
I mean, I heard about like a Subway using Bitcoins, which it doesn't make sense to me because they're like, I mean, it's like worth $1,000. So what do I guess you use
That
a
is
fraction of a
I'll give you a
Bitcoin.
fraction of a Bitcoin.
Yeah, I guess
I'll
so.
give you 0.01 Bitcoins. You know what
Oh
I don't
wow!
get too? It's if the thing's jumping around 20% a day, what retailer can keep up with where the price is currently to be able to value their products on that currency correctly? I mean, you could be all of a sudden it could fall 200 Bitcoins and somebody could be coming in, obviously and trying to get you at a different price. So they got to be adjusting the prices of the Bitcoins, how many Bitcoins it is for this product continuously here. The volatility, I believe, in this thing hurts the overall value of using it. Like if it was stable, then everybody be like, okay, well, Bitcoins are worth this. But I mean, it moves around $100 or $200 a day. So even the value of it. So how do you even value your merchandise based on this? That's what I don't
Even
understand.
by the time that someone buys something, you give them change back.
Yeah.
Yeah, you could be getting hurt on the exchange rate. Well,
Yeah.
we'll get Kenny on the show perhaps next week, and maybe we can hustle up some of the Benzinga authors that are following Bitcoin because it'd be interesting. I mean, it's obviously caught on as a craze. I guess even these young bucks here at Benzinga are not even using it yet, so it must really be a newfangled thing. Joe, are you awake there? Do you use Bitcoin at all?
I do not use Bitcoin.
And don't you get mad at your brother-in-laws? Or you're not married, but somebody that always asks
Joe's
you
just
about.
making things up
Right,
now.
right. Dina's brother-in-law is obsessed with Bitcoin, and I tell him he's crazy for, trying to play the digital currency game, and he doesn't listen, so he keeps talking about it, and it's really annoying to me.
But he did that because you did give him one good stock recommendation once. What was that?
Tesla.
Tesla.
I told him to buy Tesla when it was like $32 a share, and he hasn't
Wow.
let it go yet. And
Wow. He loves
Nice.
you.
Wait, he
Nice.
hasn't let it go that you told him, or
he hasn't let it
He
go that I
hasn't sold-
told him,
Oh.
and that he didn't buy it because every time I make a
Oh.
recommendation, he finds something wrong with it. So, but I did help him get out of Netflix with some money because he bought it at 105, and then it dropped into the 70s. So I think he sold it at like 130 or something like that.
Oh, you really helped him out.
Yeah, yeah,
Nice.
because I mean, he's a great guy and everything, but I've given him everything, free pro feed. I help him out. He doesn't take advantage of any of it, so he thinks I'm his personal advisor.
Okay, all right.
Joel, Adam Brad was mining some Bitcoins or getting set up to start mining Bitcoins. Maybe we can have him on talking about.
A
Mining.
miner.
Yeah, he's
Oh,
got
we got a miner in the office
Yeah,
of
he's
Bitcoins, and we didn't know this?
got his. I guess he's kind of doing it on the down low. He doesn't want us to
Not anymore.
point fingers at him.
You're mining a digital currency.
Yeah, that's what
Okay.
you got to do.
I guess I need to go back to school to figure that one out there. But Adam's good on a computer. We'll have an old Bitcoin show here next week.
Ooh.
Yeah, I mean we're gonna find something to do here in the holidays. But Dennis,
Santa Claus rally's coming. We'll be talking
yeah.
about the
Well,
market
why don't
being
we
at
go over?
1900 S&P.
Why don't we go over all the stocks? Like this could take us the next 3 or 4 hours. All the stocks that are making, new 52-week, not only 52-week,
Oh,
but
man.
let's take a stock like GE here. And I looked, and I believe it was September of 2008. This stock has finally returned to those levels here.
Yeah. Yeah.
You correctly called this one yesterday. It cut through that size at the 27.50, which it held up 4, 5, 6 sessions. Got up near the $28 level,
Right for the
and
next size.
yeah, and what was holding at 28, Dennis?
100,000. So there's another level there again. And I mean, this is an environment where you see 2,000, 3,000. So 100,000 shareholders sticks out like a sore thumb. Market comes all the way up there yesterday. I actually figured first time up there, it's probably going to work. I shorted some stock at 27.95. I actually took it home short. I'm still short right now. Covered some on the closing print at like 27.83 for a quick 12-cent scalp. But I'm just leaning on the old $28 area there too, doing everybody else is doing it. So I figure I might as well participate a little bit too here. That's what these things are doing here in this environment. They're going to the next whole number. We obviously know that's where the weekly options prices will be priced, and that's where there's a seller. There's a seller at the point, everybody knows it, and they lead in front of them. But we're getting a running start here again today, so second time up there could take it out.
Do you think people just lot more size on there to make it even look thicker? Like if you know someone's selling, 100 and they're in the book ahead of you, someone else could put another 50, 75 in there to make it look heavier. You think that?
Yeah, you probably do have a little bit of that going on. You got to be careful doing that though, because it's called layering. Whenever you're putting big size out there and you're just trying to make the stock look or bigger, now that is not legal anymore. Back in the day, a lot of people maybe did stuff like this, but that stuff's not done anymore. At least not if it is done. It's being done by very gray individuals because you can get in some big trouble for that. You never want to put big orders out there trying to get out of the position the other way. Putting fake orders out there is a recipe to get into trouble with the SEC.
And what about you were telling me that story about Paul Pinot, the first original high frequency trader?
Oh, that guy, and he wasn't putting fake orders. He was just putting orders, man. That guy just sent orders like crazy. He was the original high frequency trader there. If Paul's listening, I doubt he is, but yeah, he had, what was that programmable keyboard he had? He traded like crazy, man. That guy could trade.
Right, right. He had bids and offers lined up on his pro, and he actually sold it to Jack and Tom in the office too. They used to make a
They were
mint trading GE, just bid and offer, and
They were market. They were all playing market makers in GE basically. They were sitting on the bid, sitting on the offer with big size, trying to scalp. That back when we were at 16th still, I think
yep,
it was.
yep.
So they were sitting there trying to scalp 16ths off GE. Was it GE? It wasn't GE. Oh no, it was Intel. Wasn't it Intel they were trading?
They did GE, and then when it got a little bit too higher
Then they did
priced,
Intel.
yeah, I remember Intel, and I'll never forget the story. One day, Paul was trading Intel, and I got a call from the head of Bright Trading, Eddie Franco, and he said to me, "Is someone in your office trading a lot of Intel?" And I look at Paul, and there's sparks flying from his keyboard, and his fingers are all bloody and red and everything. And I said, "Yeah, Paul's trading a lot of Intel today." And he goes, "Well, I just got a call from Nasdaq, and he may bring down the system, the entire Nasdaq system, if he can."
What is this? This is like 1999.
Yeah,
Isn't
this is
there?
like 1999. And I'm getting a call, because the Nasdaq called Eddie, and I said, "Eddie, what? He's trading a lot of volume. I don't think he's doing anything illegal. What's the problem?" He goes, "Well, he's sending so many orders, okay, and so quickly that his cancels are getting there before his regular orders." And so they're trying to cancel these orders that they don't see, and then the orders are coming in, and they're just getting all these, error messages. And they said, tell him either to, turn down the
Slow down.
frequency in his keyboard or whatever. And I never, I mean, now that's just a commonplace thing, right? With high frequency trading, I mean, it's not even done by keyboards anymore. It's done
Yeah.
by servers and programs and everything. But
And they were complaining. Think about that. So they were complaining about a human being sending orders too fast. And you have computer systems that are sending millions of orders a second now. Some of these systems. So I'm sure Paul wasn't sending millions, but he was clicking. I watched him trade back in the day, and man, from a human being perspective, he's as close to a machine as you could get. Like that guy just had it all one stroke, and he'd be tap 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 tap, tap, and 25 orders are sending in, and like tap 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 tap, 25 orders, and he was trying to move stock. He was trading how much volume? He was trading huge volume on Intel. Wasn't he trading like 200,000 shares a day or something?
I can't, I think it might have been more than that.
It might have even been more. That's a crazy amount of volume. He was like doing like 1% of the volume of Intel a day. He was like a piece of Intel. He was an awesome trader. Great to watch actually. So.
Right, but yeah, I guess I can write a book. The day we almost took down Nasdaq.
And now the high frequency traders do it daily.
So other stocks, new all-time high for XOM yesterday. Finally took out that seller at the point, and then it was just a free ride after that up to the 101 level. Did it run into a little more size at 101 yesterday?
There's not much at 101, so it actually took it out, and so there's nothing there now because it actually did take it out yesterday. So no, there wasn't really that much. Maybe there's like 10,000. I looked at it briefly. It really wasn't much, but like we knew, 100 had like over 100,000 shares there. Once it took that out, it was off to the races and goes right to the next point. And maybe there was a little bit off the bat because it got up to $100.99 and then sold off a quick 25 cents. So and then it came out and took out 101 later in the day. So there's nothing at 101 now, but those big hole numbers with the institutional size, those levels hold. And when they take them out, sometimes that's, the breakout that it needed. And here it's off to the races again, triple digits for XOM.
Right, and CVX here just been banging on the door that 124 level, hit that
Oh,
several times, but got
yeah.
the running start yesterday. You had the old previous days close and low right next to each other, got the momentum going.
Yep.
You had the close at 23.51 on Tuesday. You made a low right off the hop at 23.55. Took that size out. Goes up to 124.99. But
Yeah. Why do you think it goes to 124.99? Anybody in the chat
anybody in the
know?
chat room there? Reason for it stopped at 125? How about Jim Bailey?
120,000 shares there at 125. So they ran into another institution at the next point. I actually did short this one too. Couldn't help myself. It's like first time up there, probably will not be able to get through 125. So I shorted a little bit of stock there at 124, I think 94. So I was like 6 cents I was giving up to the 125. Did hold, pulled back to 124.81. I'm still short a little bit of stock there. Took it overnight. Figured, maybe, if we ever go down in this market, at least, that one probably isn't going. Well, I look at it, if the market went up 7 or 8 points, probably gonna have trouble opening over 125, and if we ever pulled back, maybe get a little bit of money there from shorting off that level. So just playing along with everybody else there.
Yeah, I noticed here we got Jay Z in the chat room. I want, isn't that a rapper, Jay Z? Yeah, so maybe we got Jay Z.
Oh,
Maybe we
Jay-Z's then. Oh,
yeah,
great.
Jay
Welcome,
Z's.
Jay-Z.
Yeah. Looking at Chevron Corporation, still off its all-time high though. Really no major resistance in the 125 handle. You kind of scooted back through that area back in September. Let's see if it can clear it today. You have to go back. Let's see when that was in September. Back at the end of September, you got to move up to 125.84. So let's see if we can continue the momentum in that issue.
You want to see what has momentum? Those 3D printing stocks, those things are just monsters. Bring up the chart of Triple D. 93.55. It's up another $1.50 here today. I don't even think there's news. These things just rally on nothing now. Just looking back 5 days ago, this was an $80 stock. It's now 95, kind of going parabolic here as it makes the run for triple digits. 3D, can it see 3 digits?
Probably within if I shorted it, it will. It will for sure here. The analysts got this one right. We talked about that before I went on vacay. They were upgrading this thing, and yesterday had another run here. 92.68, taking that out, so that will act as support. Pre-market high in this issue has been even higher than this. We got up to 94. Boy, this was after hours here, not pre-market.
94.50.
Yeah, 90. I got 94.52 print here. So look for that. If we rally at 5:45 this morning, only 1,000 shares traded up there. Starting to trade a little bit more volume here under 94. So 94.50 is the only level to be looking at in Triple D. And we talked a lot about the hot rods yesterday, and I just wanted to talk about Tesla. And we did get the rally yesterday.
Didn't get to the 160 though. I keep waiting for that 160.
And
$2 off.
you're not the only one there. It got up near that level early in the session and pulled back. My super key secret level in Tesla is 155. I've been talking about this forever and a brother here. You had the move in the monthlies here from 194.50 down to 116.10. The exact 50% retracement is 155. You got back half of the move here. Your technical traders are licking this chops, as a potential short or as an exit from a long position. So we'll trading under there right now, but in order to continue this move north, I really think this thing has to get back and close above that 155 level.
You also got Google making new all-time highs here again today. Got up there, closed near the all-time high yesterday. 1119 closed at 1117.46. Is trading 1120.99 right now. So new highs for Google.
Yeah, kind of a tight range. Really, the only level I can give you here is one on the downside. Double bottom 1108.10 and 1108.69. That's your major support. Just keep moving your stop up from that level. Looking at the pre-market trading, we have even been higher in the session. Got up to 1122.99. So that is only 538 shares traded there. And then just Apple, what a laggard yesterday, huh?
Yeah, you know what? It has been. It's been running into a wall in the 570s. That's where it got up to on the whole rumors the China Mobile deal was going to get done. Then it had the big sell off after the deal didn't get done. And then the deal did get done. It got right back into the 570s, but it cannot get up. Every time it gets up near the 570s, now it's selling off. Got a high as 569.50 yesterday, but then was weak there again. Not really up much here this morning. Very quiet session for Apple here. Just some odd lots and traded here and there. But we're trading up down 24 cents right now at 563.66.
62.76 was the low on the gap up day on the 23rd, and then you got a $10 gap down to
Some
the
air
high.
below.
Yeah, what do you think? You licking your chops on that one and look for it to fill the gap, or hands off?
Starts to get in that area, it gets interesting for sure. So yeah, so I guess if you say it's going below 562.76, say it starts going 562-ish. Yeah, there's air below. We always like areas of air when the stocks start going in there because they start to open up a bit. So that is an interesting setup there, Joel.
Analysts have been kind of quiet on this one lately. I mean, as far as price targets or upgrades or downgrades, I guess they're all busy with their Twitter valuations or lack thereof.
Jay's asking about ONVO here again, Joel. We
Oh,
talked about it there yesterday. Is there something going on in this one?
This one, it could be related to a little 3D printing action. I'm actually looking at an article from Computer World from earlier yesterday saying that the first 3D printed organ will be coming in 2014. It will be a liver. This is what Organova does.
boy,
Jay's been all over this one. He's been
Yep.
talking about
Up.
this thing for the last week here, so good
Oh,
job
really?
there
He was doing
because
it when I was gone?
he's been talking about this one for a couple days here, yeah.
You know what? I'm gonna have to
You still
talk.
got it, Jay? Does Jay still have
No,
it?
it's his mom's stock.
Oh,
Oh
is that what it was?
yes, I
This is mom
remember.
stock. Right, right.
Yeah. You don't mix things up here. Uh, but I'm gonna have to talk to my brother-in-law about this one because he was talking to somebody that is trying to use 3D, like make X-rays 3D for like learning purposes in medical schools and stuff. So instead of
It's awesome.
so if you mess up a potential surgery on a 3D liver, like who cares, right? But if
Yeah.
or something. So this seems to be, related to that in the sector. From a technical standpoint, I like that $8 just looks like incredible. Dennis, we talked about that longer term, and now it's starting to climb back over 9. You made a 930 high
Yeah,
yesterday,
yeah.
905 close. I still like to see him make a couple lows at the $9 level. We are trading up 29 cents now in the pre-market, so we are trading above yesterday's high. I'm also looking at
If
that.
this ever gets above $10, I'd really be interested in it. Jay, you gotta let us know when this thing gets above $10. Let me know, and I'm gonna jump in there with you because he says he's bought some here too now. I like this thing above 10. I might even. Is there options on this? I gotta go check to see if there's options on this.
952.
There is.
Yeah, it's an Amex stock.
There's options. I
Buyer
like that.
beware. 952 is the pre-market high, Jay. So if you're trying to trade this a little bit more short term, you can look at that. So Dennis, before we hop on and introduce our guest, is there any other issues that are catching your fancy?
You know what? This has been a really quiet day here. We were scrambling this morning as we were putting the show to see which stocks we were going to talk about, and the only thing we really saw was Twitter. There's a couple other downgrades there. Well, actually, WLK was getting upgraded. Susquehanna. CBS is interesting though. Macquarie was giving some optimistic comments on CBS here this morning, but look at this chart. This stock here, and Joel. Remember you were talking about this like a year and a
Uh,
half ago. We were just talking. You're like, you know what? I think Apple or somebody might try to buy CBS. You were just going on a limb. And the stock was like $30, and I was like, you know what? It could happen, I guess. But the chart was setting up nice back then, and I had bought some. I actually bought some calls, and I bought the stock itself. And I wish I would have held it. I think I bought around like
yeah.
31. And I ended up selling it like 37 or 38 bucks. I sold way too soon. Here it is. You were all over this one. It's now $63.
Actually, I think I remember this was a while ago. I should have bought the leaps on this. I remember.
Oh,
I remember. Didn't we go? It was like 32, 33. We bought like the 40 calls for like we went
I
out
don't know
to
why.
yeah.
Like we had this whole thing in our head that we were going to be, we were going to call this merger here. This CBS was going to get bought because Apple needs content. What a better thing to do with all that money than to buy
Yeah, I mean they
CBS?
could
Well,
I mean they could buy this with the spare change that Tim Cook has in his pocket here, but I guess it would really hurt with their other content. So, but yeah, that stock is making a nice run. But we're gonna take a quick break here, and we're gonna introduce John Cole Scott of Closed End Fund Advisors, portfolio manager, and RIA. And he has big responsibilities over at his firm, and we're going to pick his brain on some closed end funds. We'll be right back with you. Welcome back, traders and investors. We have John Cole Scott, better known as JCS of Closed End Fund Advisors. He's a portfolio manager and a registered investment advisor, responsible for the executive duties of running the business. John, how you doing today?
Doing well. Good morning, guys.
Morning, John.
So you
Or
work.
JCS. We're calling
Yeah,
you
let's call it
JCS.
J. I like that
Yeah, I like
JCS.
JCS too. I sometimes go by Triple D, so JCS is cool. We're going JCS today.
And so, little history on the firm. How's that? Working with your dad? Did you ever? Do you ever get in trouble? Does he ever give you any time out still?
Well, it's hard not to call him George at Thanksgiving dinner. I do remember the first business meeting I called him George, and the branch manager, the other firm, asked me, was it weird calling my father that? I said, again, not so much at work, because you have to have a great working relationship that's somehow separate from the personal one if you're going to be able to work with family.
I worked with my dad for years in construction. My dad had a construction business, and we'd butt heads a lot. When I was a little kid, it was fine. Obviously, you could just boss you around. But as you get older, then you start thinking you know something, and then you start butting heads with your dad, and that can be a rough thing actually working with your dad when you think you know as much as he does, even though you never do.
All right, so let's just introduce our investors a little bit. Just what are closed-end funds and how do they work?
So closed-end funds are the original investment company listed in the New York Stock Exchange in 1893. They are really defined as three main things. One, permanent capital, which means they're born or created like stocks, like like LinkedIn and Facebook were created on one IPO. Same process for a closed-end fund. They have active management, which means they are trying to do a strategy that's based on analyst and outperformance and alpha typically, and some very unique strategies based in the sector. And then the third piece is they trade at market prices on the listed exchanges during the day, which means they produce a net asset value like open-end funds, which are their younger cousins, but they trade at market prices which are often different than an asset value, which often creates discounts of 1 to 5% at certain times. Premiums of 1 to 5% and discounts of 5 to 15% are not abnormal amongst the wide group of closed-end funds.
Okay, why? And this is always a question I have because I do trade closed-end funds. I don't really invest in too many, but I trade them every once in a while. And I do notice, and I sometimes look at the net asset values and be a fund trading like 15% below its net asset value. Why would they do that? Like, why would a fund trade 15% below of what it's actually worth?
Well, there's a little bit of we're not sure, but the best answers my career has come up with for over a decade is that first off, the fact that they can trade at a discount has to allow for some natural discount to be considered normal, which is why you'll see, discounts kind of a 3 to 5% for an average closed-end fund over long periods of time be a normal level because there's always that risk of a wider discount. Secondly, when you're competing on yield and performance, then sometimes your performance lags, or sometimes the market is acting differently and people are out of favor with what you're doing, and so therefore people require a little bit of a discount because they feel like they need to have some protection from what's going on.
Okay.
What's interesting is as long as there are a couple of factors, you have protection from really wide discounts for almost all closed-end funds, and that's the activist. Activists generally get involved around 12 to 13, maybe 14% discounts as long as they have three things. They have enough liquidity to be able to do what they want to do. And sometimes they surprise each other with which funds have enough liquidity to do their job. Second, a trackable ETF to hedge out the risk of the portfolio actually going down because of the market versus discounts changing. And that helps you protect the really bad downside of risk.
So basically, that activist investor will come in, buy these closed-end funds at a discount, short some equivalent, asset if it's like something close to like the S&P or whatever it is, to obviously take the market risk out of it, and then they're looking to capture that discount. So if it's down, like if it's 15% below its net asset value, they're looking to come in and capture that 15%. Is that what they're doing?
Yeah, so as long as there isn't, like, the manager doesn't own half the shares so he can block whatever they want to do, as long as that isn't blocking you or some other unique scenario, they will look to do tender offers near NAV. They'll look to do share buybacks. They'll look to do dividend increases. They've actually fired managers to try to create better performance. They even took control of a fund and became the manager of a closed-end fund that they didn't like what was going on. So it's a little
JCS now.
different. Go ahead.
I was just going to say, okay, so we got this. Is there any ones that you're eyeing right now? Now, do you advise your clients that when you see something trading at a 10 or 15% discount to NAV, do you advise your clients to get active in this and maybe buy these ones?
Well, we do have a model where about half of the focus is on activist preemptive activity. A lot of the good stuff actually closed in the last 2 weeks, as in the discounts have narrowed enough in 2 weeks that it's challenging right now to see what's going on. You've called us at a really interesting time in the closed-end fund land. The January effect, we're right, I think, 2/3 of the way through. Discounts widened on these funds 2, 3, 4% wider than we'd seen all year up until 2 weeks ago. We've rallied, 2, 3, 4, 5% on closed-end funds, which aren't the most exciting investments, in 2 weeks on relative pricing because of people recovering from tax loss selling and people buying really cheap things beat up because they had really bad intra-year performance.
Right. Now, do you have a couple that are still, if we're looking out there as investors, do you have a couple that you're eyeing right now that you think are cheap relative to the NAV, or they all have closed up?
Cheap the NAV there. I mean, I still think that, and again, most closed-end funds, they're not home run vehicles. They're singles and doubles.
Yeah.
You trade them when you see opportunity. You hold them to see what happens. But one thing I like about General American Investors is it's a large fund, very liquid. It's still at a 13.5 discount. It's a U.S. equity fund. The manager has been a little bit more aggressive than some of his peers, which has paid off performance-wise. His net asset value year-to-date through yesterday is up over 30%. So it's like the market, and yet closed-end funds are usually, because they're often for retired folks, less aggressive. This has been matching the market, yet you're still getting 87-cent dollars to see whatever happens going forward. The discount a year from now could be 13 discount, and you still could have done very well. You don't have to close a discount to make money, but it's a possible upside.
Yeah, obviously, if the market moves up, you're still going to capture that. But sometimes maybe the market could be flat, and if that discount closes, you could still make money on these things too. It's always interesting. Where do we find, I'm just interested because I trade these closed-end funds too sometimes. Where do we find information on, is there a website we can go to, or is it your website we can go to where we can find?
There's a couple of websites. I'll start with the free websites because people generally start with free, and then if they need more help, they find the paid stuff later. Probably the widely recognized site. They're both bits of Morningstar data. There's Nuveen's CEF Connect, or CEFConnect.com.
Morningstar is built out a great. Connect?
Yeah, CEF Connect, all one word, .com. Morningstar has built out a closed-end fund site that's gotten more robust in the last 2 years. There's an up-and-coming site called CEF Analyzer. That's CEFANALYZER. That's actually run by an ex-Google employee that's trying to have fun giving Morningstar and CEF Connect a run for their money just on programming and advancement. And then there's a really good resource, especially for folks that have a lot of questions that need patient answers, at Morningstar's discussion forums. Their discussion forum on closed-end funds, it's mostly retired, relatively sophisticated closed-end fund guys that answer lots of questions all day long, and they're not FINRA licensed, so they're allowed to. So, unlike, I can't get very involved there because of how we're registered.
Looking at this GAM, I mean, it's supposed to be a kind of a less risky vehicle, and I don't mean to catch you off guard here, but back in November, this thing really took a haircut. It gapped down over a point. Is that just a rebalancing of the funds, or that was back on November 13th here? So you're looking at a pretty conservative investment. That was a pretty big drop. Do you know what?
Yeah, that was a $1.89 dividend it went at.
Okay, all right. So
the challenge, you bring up a hugely great point that so many people miss. When you look at a closed-end fund chart, make sure you're looking at a total return chart, because the average closed-end fund as of last Friday yields about 7.2%.
Right.
Which
so
means if you let's say a lot of funds yield 8%, roughly 2% a quarter. If you don't think about that 2% a quarter into the market price, you're going to look at a lot of charts and go, oh, this thing lags. It's horrible. because the S&P yield is 5% lower, and so this looks like it's an outperformer when it may or may not be? That's a great question.
Yeah, because if it's 7 or 8% coming off of it all the time, and the market's up 8%, that thing will look flat if it's just paying out the earnings, obviously, just as dividends to their shareholders.
I just had one other question for you
Yeah.
too. Now closed-end funds. I mean, you're not recommending that. You're recommending a percentage of your portfolio in closed-end funds, right? You're not just your customers are not just. This is just a part of asset class that they put in their portfolio, correct?
Well, I'll tell you that is a normal perspective. I'll tell you the two people that tend to hire our firm. They're the people that need income levels blending between 7 and 8, and they don't have many other choices, and they get comfortable with the closed-end fund nuances, which are less inefficient, more volatile. Like the average muni bond fund has a market price volatility almost the same as the S&P 500. So you can't buy a closed-end municipal bond fund and think this is a boring investment. What you're buying is exposure to that asset class at a higher yield, but knowing you're stepping into more volatility. So that volatility, some people say, oh my gosh, it's too risky, I can't handle it. Well, the point is, look at some of these charts, look how the funds handle bad months, and if you can't handle that as an investor, then yes, you shouldn't be here. The other folks that hire us were already into closed-end funds, they drank the Kool-Aid, they love them, and they decided that they want to spend more time traveling or with their grandkids, so they basically turn it over to us. So we realize closed-end funds probably are a 10 to 25% position for most normal portfolios, but the people we talk to, it's typically 70 to 90 to 100 because they've already stepped into this is where they want to live. The key is closed-end funds are a structure, not a sector. They have their strengths and their weaknesses, but if you understand them and you don't go in blind, then you typically can come out with great results.
Do you have some funds? Because I know I trade these things sometimes, and sometimes a few of these funds can be pretty illiquid. Do you stay away from the illiquid ones and just kind of focus, your investors onto the more liquid ones? Because obviously, if the thing's got a 2 or 3% spread, which I think some of these things have, then just by selling out, and trying to get out of your position, you could lose 2 or 3%, right?
Generally, when we screen, we like to have $500,000 in liquidity, which is 30-day trade volume times market price. But for firms that have the ability to access outside traders, there's about 5 or 6 traders in the U.S., and we use 2 of them presently, they can find full days trading volume on the phone. So I say closed fund liquidity can be stealthy. I didn't know it existed 2-3 years ago. We found these providers. They tell me when they've got buyers and sellers, when there's imbalances. They work with activists, they work with institutions, with endowments, with firms like us. So there's days where you can actually have a full day's trading volume done over the phone in 2013, which I'm told is rather rare in the rest of the capital markets.
So basically, you'll call up, and then you'll find liquidity on the other side of some other institution or something that wants out. They'll cross this trade and then go off exchange with the print. Is that kind of how it works?
Yeah, so basically, the phone negotiated. I say I want to buy at 11.14. Their client agrees, and then you see it hit the plotter. It's a public trade, but it was done,
negotiated off exchange
through the first system we ever had. The way trades used to happen on the telephone.
Yeah, interesting.
The good old days.
I would say limit orders are important if you don't have that access. Not held orders, if you've got access to them to your custodian, are very useful to hide what you're doing. And to think of a 2 to 4 day window as your timeline if you've got serious assets. And serious assets, I'm talking north of $5 to $10 million, in closed-end funds. So it's very few individual investors, and probably north of 25, 30 million for advisors, institutions.
So the individual investor trading, 1,000 shares or 500 shares or 2,000 shares, they're probably fine to go find their liquidity on the exchange in most of these vehicles. Then
and just
they can, and then the key is limit orders, patience. Knowing that if you find a really inefficient price, to give up 40 basis points because you want it now versus wait to see what happens. You have to decide that 40 basis points, is worth taking to meet the bid-ask spread.
Gotcha.
That's an investor decision.
And you mentioned the term there, Dennis. I don't even know. You're probably too young to remember or ever heard this term, but not held order. In basic, Dennis, you've heard of that kind of order. I mean,
Yeah,
you can
it's still,
apply.
yeah.
Yeah, I mean,
But
I
explain that
yeah,
actually.
I
Maybe
haven't heard
GCS
that
can.
since I've been back on the trading floor, and that's been over 20 years. And basically, when you give a broker, in this instance, a broker for a closed-end fund, a not held order, basically what you're telling them is, you want this price, but you're not going to hold it to them. So if it
Yep.
basically you're giving the broker the opportunity. Sometimes on not held orders, I remember down on the floor, someone comes in with 400 or 500 S&Ps. If you show that price on the floor, people are going to dance around you. But if you give someone a not held order, you're saying, hey, I want this average price of 11.14. If you get some at 11.18, some at 11.12, 11.13, I'm not going to hang you. It's a not held order, and it's actually a very, very smart way to work the orders, especially in illiquid instruments.
It is, and the way I put it this way, closed-end funds are 85% held by retail investors. Muni bond closed-end funds are 96%. I'm probably now 95% held by retail investors. So you've got a lot of sometimes sophisticated, but often short-term, irrational, waiting to get back to even. You don't want to, just less focused, diligent because it's not their job, traders. And so you really need to have more flexibility in your trading and more patience in your trading than simply I have to be in or out today.
Okay.
That's how we view, ETFs as exposure vehicles, and we view closed-end funds as inefficient and income-oriented vehicles.
Okay, just to finish up the interview, I know there's a lot of different closed-end funds out there, and you're following a lot of different things. A lot of things go into your investment calculations and your models. But are there sectors right now that are catching your attention that you would have people just keep an eye out for, or is it all just based on where things are trading in relation to the net asset value?
Another great question. So if you're familiar with John Templeton, he was one of my father's, really investment gurus and mentors. He says when there's blood in the streets is when you buy. So two of the areas, it's recovered a good bit, but REITs got crushed second half of 2013. There are a couple of well-run REIT funds. Cohen & Spears has some. There's a few others out there that just they give you diversified active management. You've got some reasonable discounts. One of them, let me check, it's yesterday's discount. Closed yesterday at still a 10 discount with RQI. It's a liquid U.S. REIT fund that we do have exposure to.
Okay.
Discounts narrowed, but it's still cheap historically, and it's a way to gain cash flow and upside. So REITs, I think, are optimistic. Optimistic for MLP funds because it's a growing part of our sector, master limited partnership, our energy infrastructure. And those things have a tax advantage dividend as well.
Okay, John, thank you very much. John Cole Scott, better known as JCS here in Benzinga land here. Thank you very much for coming in. We definitely got an education here in closed-end funds. It's always good to talk about different sectors and different ways to approach the market. I appreciate you taking the time out this morning to join us, and hope you have a good new year. And we'd certainly like to have you back on in January.
I'd love to be back on, and we have our quarterly research call the second Wednesday. People can find it on our website, cesadvisors.com.
Okay, thank you. And now we're gonna move on to Mighty Joe Young with the headlines.
Thanks a lot, Joel. Thanks, John Cole Scott, for coming on the show today. Good to have you. We've talked on the phone several times. He also contributes content to Benzinga.com. Did you know that, Joel?
Yes, I did. You told me yesterday. I don't forget anything you ever tell me.
Hashtag sarcasm. Moving into today's headlines from around the globe. BlackBerry's founder share sale considered a smart move, according to the Wall Street Journal. Two BlackBerry analysts had this response to co-founder Michael Lazaridis' decision, tongue twister, decision to sell part of his stake. Smart move. While disclosing that he had sold 3.1 million, Michael also officially said that he would no longer pursue a joint bid to buy BlackBerry.
Yeah, Joe, just a real quick update on shares of BlackBerry here. Just had that major run up to the 780 level. Had a couple tops up there, 769 to 780 triple top. Came down to the $7 level yesterday. Snuck under it. You had a 703 low on Tuesday here. So critical for BlackBerry to hold that $7 level today.
Very nice, very nice. So, moving on. UPS's small fleet of cargo planes have caused delivery problems. Again, the Wall Street Journal reports that on the day before Christmas, dozens of UPS workers responsible for loading packages into planes to be shipped out were left standing around idle because the unexpected glut of packages from last-minute shoppers had swamped the company's air fleet. While UPS has a bigger share of retail e-commerce business than competitor FedEx, its smaller fleet of cargo planes might have been a limiting factor, people in the industry said.
Was it the drones that they had problems with?
Nope, no drones yet. Just those tiny little cargo planes. Puddle jumpers? Or you think they're bigger than that?
I think they're somewhere in between drones and puddle jumpers.
So, though, since UPS has a larger market share of retail e-commerce, why would they have, I guess, a sort of insufficient fleet of cargo planes for the United States compared to FedEx?
I guess there was just like the online buying this year for it just really stepped it up and just overwhelmed these companies. I know Jake got shut out on a gift for his mom. I mean, if there's one person you want to make sure that you get their gift on time for, it's your mom,
It's Mom.
Jake.
We actually had a debate about this last week, though, about Amazon Prime shipping. I was under the impression from an article that I had reviewed that if you wanted guaranteed shipping before Christmas, your best bet was to have your order placed by the Wednesday or Thursday before Christmas. And Jake said that no, he had until Sunday.
Yeah, that's the email that I received. Well, at least that's what they sent me. They said that I had to place my order by Sunday at midnight for it to be, able to show up. So I had actually ordered that particular gift for my mom. I had other ones too that I actually, I bought, and brought with me on the plane. But that one I had ordered on Friday, and I'd ordered overnight shipping on that to ensure that, okay, I've got 3 days. I assumed the system would be mucked up a little bit. So, I said, all right, well, I'll just pay the $4 for overnight shipping on this book. But
Jake,
didn't work out.
do you really consider a Benzinga stress ball a present for your mom, or a 2-week free edition to Benzinga Pro? I mean, come on, jeez.
It was a full month free to Benzinga Pro. Okay.
Okay.
I was
And
about
it
to
was a
say,
Mach 4 subscription.
cue Joel O'Connon's short recommendation for Amazon because they are full of liars, apparently, about shipping. I'm waiting for it, Joel. It'll be coming soon. Moving on to New York. New York City sugary drink rules may be cutting soda drinking. The New York Post saying that New Yorkers are buying much less juice and soda after new rules were put in place by the city, with Coca-Cola's brands falling 3% and Pepsi's down 14%, according to the Post, citing Metro New York City grocery store sales data for the year ending November 2nd. What do you say about that?
The stock doesn't move.
There we go. Microsoft and Nokia deal faces Chinese limits on patent fees. Bloomberg reporting that Chinese mobile phone makers asked regulators to make sure that Microsoft's 5.44 billion euro or 7.5 billion US dollars bid to take over Nokia's handset business doesn't result in higher patent fees on wireless technology, according to two government officials with knowledge of the matter. Is it Huawei Technologies and ZTE Corporation asked China's Ministry of Commerce to set conditions on the deal, making sure Microsoft doesn't raise patent licensing fees afterwards, said the people, who asked not to be identified because they were not authorized to speak publicly. The ministry is conducting an anti-monopoly review of the deal. International Space Station change has board of directors not International Space Station, my bad. Institutional Shareholder Services.
Whoa.
Whoa.
Yeah, we'll have to talk about that one later, Joe.
Yeah, right. It's Friday. ISS change has board directors rethinking proposals. Wall Street Journal saying a little noticed change in the way influential shareholder advisor makes its up or down recommendations on director elections may have some companies rethinking their responses to investor proposals. Starting in 2014, Institutional Shareholder Services is changing its guidelines to recommend ousting directors who don't implement a shareholder proposal that got a majority of the votes cast at the 2013 meeting. Again, that was the Wall Street Journal. Don't worry, I got plenty of trivia at the end of these headlines, so it'll be much more interesting. A Boeing 777X exit from Washington would leave multiple problems. Bloomberg reporting that the state of Washington faces a credit downgrade, higher borrowing costs, and the loss of jobs and tax revenue if Boeing decides to move the production of its new 777X jetliner to another state. Washington's bid for the jetliner may hinge on a January 3rd vote by union machinists on whether to accept a contract extension rejected by union officials that would freeze pensions and eventually replace them with a 401k style retirement plan. ComScore saying that online sales softer than expected despite the shipping rush. Wall Street Journal reports that ComScore released its estimates for online shopping spending during the holiday period, and it's a mixed bag. Spending was up overall, and on all the big days, there were 10 different days during the November to December period when the company estimates more than $1 billion was spent online in a day. However, none of those 10 days were in the final week of the season ending December 22nd, despite the late Russian shipments that caused UPS and FedEx to miss some of their Christmas Day deadlines, according to the WSJ. That wraps it up for my headlines. On to today's trivia. On this day in history, Radio City Music Hall opened in 1932 at the height of the Great Depression. Radio City Music Hall was the brainchild of billionaire John D. Rockefeller Jr., who decided to make the theater the cornerstone of the Rockefeller complex he was building in a formerly derelict neighborhood in Midtown Manhattan. The theater, was built in partnership with the Radio Corporation of America and designed by Donald Deskey. Also on this day, in 1945, the World Bank and International Monetary Fund were created with the signing of the agreement by 29 nations. Did you know that, Joel? IMF.
I did study that back when I was in school.
And then, just for fun, born on this day. Can you think of anyone born on this day, Joel?
Give me the year.
We'll start with 1947.
Born on this day in 1947.
And this one's a shout out to Dennis as well.
So, Pierre Trudeau.
Wrong. Michael Edward, otherwise known as Mickey Redmond, was born on December 27th, 1947.
But you see, was I close? Because you know why I said Pierre Trudeau? Does anybody know who Pierre Trudeau was?
Tell
Crickets,
us.
crickets.
Former, come on, Dennis, pipe up. Former Prime Minister of Canada, I think. I might have just made
so
that.
just automatically makes him a hockey player? Is that what you're trying
Well,
to say?
is it Mickey Redmond from Canada?
Mickey Redmond is a former professional hockey player, currently color analyst for the Detroit Red Wings on Fox Sports. Redmond played right wing for the Montreal Canadiens from 67 to 71, winning Stanley Cups with them in 68 and 69. He scored 27 goals for the Canadiens in the 69 to 70
Where's he from?
Canada.
Canada.
His lopsided commentary is just unbeatable. It is absolutely great. You know, they'll get in a huge brawl, and he'll just go, "Oh, let him play."
Bingo bongo.
Oh, yeah.
Isn't that one of his sayings too?
Yeah.
And
Anytime that one of the Wings players even gets touched, they're like, "Oh, that looked like a penalty right there." It's great.
What other additional comment on Mickey Redmond? His daughter played on Dana's 6th grade softball team.
Joel always has to tie it into himself somehow. The next born on this day goes out to Jake and Brent. Any ideas? On this day in 1952.
52.
What Scottish-born rhythm guitarist was born?
Scottish-born rhythm. Give me its initials.
I got nothing here.
I didn't ask you, Joel. DK. That's a Delta Kilo.
Yeah.
DK.
Do we give up yet?
Don Knotts.
Don Knotts was not a Scottish-born rhythm guitar player. David Knopfler, Dire Straits, brother of Mark Knopfler,
Oh, nice.
also known as the quitter of the band. He was only with them for 3 albums before leaving to pursue a solo career. He's also a poet and book writer. Co-founder British rock band Dire Straits. After 3 years, he quit the band. Solo career. And the last one goes out to Brady here, who was born on this day in 1943. Brady. His initials are PS. He's a Brit.
Paul Simon.
Oh, nice.
He was born in Brooklyn, Joel.
Oh,
Okay.
well.
Paul Simon.
I was gonna go. That's actually the direction I was gonna go too. So I guess I'm that wrong
Alright.
as well.
English poet and songwriter Peter John Sinfield was born on this day in
I
1943.
just was gonna guess that.
Most famously known as the lyricist and co-founding member of early incarnations of King Crimson.
Why would Brady know that?
Because he's a music minor.
Oh, okay. Okay.
King Crimson, whose debut album In the Court of the Crimson King has been regarded as one of the most influential progressive rock albums ever. Later on in his career, he adapted to writing for pop music and co-wrote a succession of hits that were sung by artists such as Celine Dion, Cher, Cliff Richard, Leo Sayer, Five Star, and Bucks Fizz. That wraps it up for today's editorial headlines and trivia tidbits. Just a reminder, ladies and gentlemen, that this show would not be possible without our dear friends at OptionsHouse. So we'll give you 150 commission-free trades just for signing up for an account through this page. Click on the buttons at the top, bottom right, sign up for an OptionsHouse account, get 150 commission-free trades just because you listen to Benzinga's pre-market info. With that, I'm going to hand it over to Jake here, who's going to give us the movers ahead of the opening bell. Jake, please take it away.
Thanks a lot, Joe. Well, Joel, I think we should probably, we've had some laughs here, but probably should take it back to the market. I do have a couple stocks moving this morning. I really want to take a look at the shipping sector. Dry ships is the first one I want to take a look at. That's Delta, Romeo, Yankee, Sandy. One of the big dry bulkers here, and these are on a move. Now, take a look at that chart over, was it last 4 sessions? It's gone from the low $3 levels to above $4. I mean, now these are really volatile stocks. Don't get me wrong, but am I seeing that right? Is it over $5 now?
Did get a pop up to 506, up another boom, 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 6% here in the pre-market. Continuation of a 3-day move here, now moving into its 4th day. Brent might want to check the wires on this to see if we have any.
We've been watching them. We've been watching the wires specifically for these dry bulkers all morning. Usually what they move on this early is the Baltic Dry Index, but we still have not gotten the headlines on the Baltic Dry. Although, I mean, they've been trading up for the whole pre-market, so I don't know if the market has the Baltic Dry numbers somewhere else, but we have yet to receive them, so we're kind of keeping an eye out there. But when these stocks decide to move in one direction, they move hard in that direction.
Yeah, just go back, Jake, though. Go back to April and May of 2011, 3 months or 3 weeks in a row, 3 months in a row, excuse me, looking at a monthly chart here, you hit, boom, right on the nose, this 510, oh, that's an ugly looking chart there, but 510, 512, and 519, 3 highs back in 2011, so gotta be some stock to chew through there.
Absolutely. There's a couple other names we want to take a look at. Diana Shipping, DSX is the ticker there. Let's see if they're moving up. Move up not nearly as much as dry ships. Diana Shipping still up at that $14 level. Last quote is that's what I was seeing at least. Up over 2.6%. So rallying there. Going to take a look at a few of the others too. Eagle Bulk is another one. Echo Golf Lima Echo for those of you following along on your own. Up over 7%. Wow, looks like they're heading towards that $5 level. And then the last one is Free Seas, just ticker free, Foxtrot, Romeo, Echo, up 11%. Wow. So these dry bulkers are moving hard. So keep an eye on these guys, especially at the open. Watching out for some of that data.
Yeah,
specifically on the Baltic Dry.
What was the second one you mentioned?
That was, let's see, it was Eagle Bulk Shipping, Echo Golf Lima Echo.
So so this just tracks the overseas shipping.
Yeah, these are just like the big dry bulkers. So when you have those container ships, that's what these guys are doing. And the Baltic Dry Index is like how they price what they're shipping. So that's literally how much money they can make by day is what that dry index runs. And it's been a range from 600 to all the way over 2,000 right now. So the index has been running quite a bit right now.
Perhaps Amazon put your mom's gift on one of the ships, and that's why it hasn't
Maybe they're sailing it over the mountains into Virginia. I think you might be onto something there. Well, we also have a couple others moving this morning. Twitter, once again, all over the place. Got to bring that up. I'm almost getting sick of talking about this as about Tesla, but Twitter looks like it dipped below the $70 level. Is it still below there from what you're seeing, Joel?
Yeah, actually, I was just gonna tell anybody that if they're out here trading this or out here shorting this, you have hit perhaps an objective here. 69. Got a little bit more ways to go here. 69.13 was yesterday's low. So far in the down 335. Dennis might have been a day early. Too bad he wasn't trying to do this as a swing trade. 69.85 pre-market low. They're just pounding the daylights out of this thing. Maybe 69.13 will be the level. That was low yesterday's trading. You take that out, folks. You're going down to 65.5.
Oh my, now that's all fueled by that Macquarie downgrade this morning to an underperform rating and a $46 price target. Keep in mind that was their previous price target there. They just hadn't bumped it up since the rally. And the report was simple. They're just saying that the fundamentals are not what's driving this, and they don't want to be making a call on it to the bullish side if they don't know why it's going up. And I mean, I think it's kind of fair. It looks like they're just trying to get out of the way. And they felt so far past.
When did they? Do you know when they came out? Did they came out with the buy recommendation? Was that off the IPO? Do you happen to have that?
It was pretty early. I'd have to scroll way back in the feed, but it was a buy recommendation at one time. I mean, the shares have almost doubled their price target. So I mean, I think they're just saying, all right, anybody who got in from our call, it's time for you to get out.
But do they tell their clients to get out at 46 when it's at 46? You see, that's the thing I just don't understand. Now
I think that's what they were saying, or that was the original exit price that they were posting, but they just hadn't updated it. I guess I don't really understand how you trade those, like when you're a client at least, how you're supposed to trade those reports. You know what I mean?
If anybody in the chat room, has brokers still and trades off their recommendations and things like that, I'd be curious to find out because I've, brokers can make you broker, and I just wondered that if anybody follows those, because I think it's great that they make the call. I mean, I can beat them up for raising the price at 46, but I just would be interesting. I know Alir used to do the trade to ratings and stuff. Maybe we should ask him about it. But I'd really like to hear. Back in the old days, people used to pick up their phone, get a recommendation from the broker, and the broker would make a big commission. And now you have places like OptionsHouse where you can do 150 free trades, for free.
Yeah,
and and you can make your own things. But maybe that's another guest that we can get on from next week. Get a broker on and see how they handle those things.
Definitely. Another little sector I want to take a look at, I guess not necessarily a sector, but a group, is the 3D printing sector. We've been seeing a lot of strength recently in this, seeing 3D systems running up this morning. It's not up as much as it was. It's up about 1.7%, although it looks like it just printed down farther than that. It's still above $93 though, so 3D systems delta running up there. Not a whole lot of news, just some strength in the sentiment there. Going to take a look at Stratasys as well, which is another peer in the space. Sandy, Yankee Sandy, also up a little over 1%. And finally, the X1, which is X-Ray Oscar November Echo, for those following on your own charts. I'm not seeing a whole lot of prints there on the X1, not enough to really trigger a scan to say it's up or down. Joel, what do you think of the 3D printers? I mean, these are... I know you guys were talking about this a little bit earlier in the show. There's a lot of potential for these technologies, but these stocks have been running like no other. I mean, do you think 3D Systems is just going to blow past that $100 level? Do you think it's going to bounce off it sometime? What are you thinking here?
I just, I don't think in these stocks. I mean, I don't have them in my portfolio. I guess, two ways, to play this. I mean, I think, one potential that could hurt these stocks is you get someone like Hewlett Packard decides to hop into this, and we've talked about that before. So I mean, I guess I would play it that the cheap way on that. I kind of like, Jay's recommendation here on this, ONVO. I mean, if going into the whole 3D printing thing, I mean, if you could start to use, the printing. I mean, there's a lot of different uses for it. I mean, for car production, for working on models, using it in the medical field and things like that. I guess, and I always end up buying the laggards, and they just end up being laggards. But that's an interesting way to play it. If I was holding on to a stock like 3D, I would just try and use a trailing stop on something like that. So if it took a level, and I mean, if you've been holding it a long time, this $85 level, just eyeballing it, 7 points away, gets close to 100, and then of course, if you really are nervous about these things, find out when the earnings report is. Find out what's coming out, and if you want to do something, maybe sell some calls ahead of it, or buy some, better yet, buy some protective puts on the downside. There's a lot of ways you can do it, as opposed to, just one day it comes in and it's down $15 because of multiple downgrades. So that's one way to play them.
Well, we did just have the markets open there. I did say a headline cross in the Benzinga Pro feed. Gold is up over $7 an ounce since just before 9 a.m. It hit that pre-market high of 12.18. Joel, any thoughts on gold? Or, I mean, it's now above 1,200. I mean, obviously, broke out of those lows there. Any thoughts on the shiny commodity here?
I kind of like the chart formation here. It is had been moving up. People had been probably accumulating at the $1,200 level. We've hold that. We've taken out yesterday's high at 1215.40. Went to 1890, pulled back a little bit. I think I'd figure out the 50% retracement on the day, which I can easily do. That's 10 points. So like to see it stay above 1350. Then I would check out the average daily range for a target on the upside. If you're going strictly by the charts, you don't really have any valid level in there up to the December 19th high of 1226. So let's check in on Twitter here.
One thing you may want to take a look at real quick before we do Twitter,
Sure.
staying on the commodities, is crude oil. It did break above the $100 level.
It did, huh?
So there's something you may want to take a look at there real quick. I know we're talking commodities right now.
Yeah,
so
no,
we can
great.
just knock that out real quick.
Yeah, we had noticed that it had a quiet range yesterday, less than a 60-cent range, and mentioned 100 as a psychological level, but really not anything in the book, in the charts to make it valid. Now you are back trading in triple digits here. 101.24. Boy, it's got a ways to go. I think I would just take a look at the 9-day range. And who do we have on? Well, last week I was gone, but the week before, we had Joe's, the guy you were teasing about, I think, catching a cab or something, or running to catch the cab. He was talking about looking at oil. He thought it was deeply...
Matt McCall.
Matt McCall.
And it was because he took a cab home from the gym.
Oh, right. No, well, Matt, if you're listening, kudos out to you here on your crude call. We'll have to get you on next week and see what your exit plan is for that issue. So, crude back over $100 and kind of did it in a quiet fashion here. So look, everyone's probably trading Twitter here, and let's take a look at what the daily range has been. The daily range in Twitter, 70.80 to 69.52 there, opened up right in the middle, just for a little bit, using the pre-market trading here. We did continue through the pre-market low right before we opened. 69.80 was the low. We went 30 cents below that, and then we got the nice pop. So the 69 handle seemed to be providing some support here for Twitter. You also had a yesterday's low at 69.13. So I think if long Twitter can hold in this 69 handle here, I think it'll be able to shake off this downgrade.
We do have, I'm kind of just watching some of these 3D printers. The X1 is rallying now up over 2.3%. So I know we were saying it was kind of weak in the pre-market, but looks like it's picking up where 3D Systems and Stratus is kind of left off there. So it might be something to kind of watch there.
Did have a little bit of resistance at the $60 level. Kind of paused there for a few days. Perhaps someone was taking a piece out. Well, I got through it yesterday, 61.13. We opened up, gapped up above that level, up to 62.19. Boy, that chart looks like a steep climb, but I guess of those stocks you want to own. No major resistance in the book until you get up to the November 19th high of 63.50. But look at this thing, man. Since I left on vacation, it went up. Just put on $10.
No kidding. Another one I think we should probably take a look at real quick is one of my favorite stocks to talk about, and it's Carnival. Charlie Lima stock is battling with that $40 level right now.
40?
Yep.
40?
I kid you not.
It's a wonder what happens to that company when they don't have any ships go down or
No,
no
right?
boats mistakenly leave the dock. Look
Yeah,
at
it's incredible. All they have to do is just not float a cruise ship down a river mistakenly, and they're good to go. So, you know what? I think that should be their new playbook. Just don't, sink any of their ships, and they're good to go.
You like cruises? You ever been on a cruise?
You know what? I haven't. They look awesome. I'm not gonna lie, but I've heard some good things about them, but I couldn't say one way or another. I haven't been on one.
Well, my main thing is you can't golf on cruises.
Not yet.
Yeah, I like to golf on vacations. Yeah, some of them have driving ranges. Did 2 cruises. Did one with my family a long time ago, and I did pretty well at the casino, so I liked
Nice.
that one. And then did an Alaska cruise, and that's really the only way you can see Alaska, and that was great. So I highly recommend that. But what a parabolic move here now over the $40 level. Mickey Aronson, he's the owner of the Heat, CEO of this company. He must be happier than a pig in slop here. Let's look at it in the weekly chart, man. The weeklies don't even do anything on Carnival here. Let me take a look at the monthlies, and look at that $40 level sticking out like a sore thumb here. $39.95 was a high back in December 2012. So they could keep the Momo. It needs to hold above 40 here, keep them move up. But boy, 40's been a major level for a long time. And then let's look at its brethren here, see if it's been the pair traders have been lopping on this one. RCL, Royal Caribbean, I think is the name of it.
Sure is.
And that's been moving in tandem too. That stock is much closer to its all-time high, I believe, it made in 2011. 49.99 is making a nice move today. It's taking out ooh, look at that consolidation here. Oh my God, consolidation station here. We've had the last 4 including today, the last 4 trading sessions between 46.88 and 47.66, bumping up against that level again today here. So below 47, I would definitely cut this one loose from the dock.
Oh my. Oh my. Another one I want to take a look at this morning is Intel. We saw a little bit of weakness in the pre-market there, so I wanted to kind of pull that one up and see what it's doing right now. It doesn't look too exciting. This is up in the kind of rallied up from its losses there. Over, maybe testing that $26 level sometime soon. Nice little rally, I'm seeing on the chart over the last, group of sessions, at least since early December. Any thoughts on Intel here?
That crazy action that this thing had, I remember this was a couple of weeks ago we were talking about. This was so uncharacteristic for Intel to drop $2 in 10 trading sessions, get it all back, went up to that level again, failed, came back down, filled the gaps, had a nice rally here. I think I would just draw a real steep trend line here and let that baby hug that, and then if it broke the trend line, perhaps let loose on it. Intel is now approaching levels we have not seen since June of this year when it got up to 25.98. That coincides with a nice round number of $26.
Transocean was another one of our pre-market movers here. That's ticker RIG, Romeo India Golf. That's one of Carl Icahn's targets as of late. Shares are up a little under 1%, but we may be getting kind of near that $50 level. We're at 48.55 is the last print that I saw, but I'm a little delayed here. So it might be something to take a look at here. Only a point and a half away from that $50 level from what I'm seeing. Any thoughts on RIG?
I got it recently added to the S&P 500, didn't it? Was that something, or was that
Yeah,
taken out? Yeah, I got a little boost off that. Kind of nice formation here. I might even call a head and shoulders bottom here. That left shoulder at the 48, and a little bit of forming again at the 48, and then you got the low under 47 here. I'd really like to see this stock clear 48.70, 48.89. Those are the highs we had back, I think, I know in mid-November. I'm not sure if it was added to the S&P, but yeah, lower cost swing trade here if you're looking to risk under the $47 here. Not quite moving like some of, I mean, it's a little bit different than your ExxonMobil and your CVX, but this might be one to keep an eye on in 2014.
absolutely. It kind of knocks out the group of movers that we had this morning. I mean, it was a pretty quiet pre-market session. I mean, if I'm looking at some of the top downgrades, the initiations, not a whole lot. I'm just kind of looking through some of the initiations, see if we've got anything interesting here. Real Good Solar. Here's one. RSOL, Romeo Sandy Oscar Lima. Cohen and Company initiating it with an outperform rating and giving it a $3.50 price target. We had a close of 266 yesterday, so maybe this is a chance to kind of take a look at the solar sector. I know this is one that trades all over the place. Real Good Solar is one of those that's super volatile, even for solars, because it's such a low-priced stock. We do like to watch these just because they are such interesting trading vehicles. Any thoughts on Real Good Solar here, Joel?
They got the pop here and a gap up. I don't like to see that in lower price stocks. 275 really seems to be the level here. Hit 277 in today's session, had a 275 and a 279 high earlier in the month here. So little pop, a little drop here. I don't think I could get real bullish this thing until we got above the 280 level here, and then you got a little bit of a chance, and then might as well. I haven't looked at First Solar in a while. Let's see how that stock. Ooh, quiet. Holy macro. Is that chart right? Am I looking at an intraday chart? Or does that. Look at that thing. Wow. Way too quiet here, man. You strangle people out there. Look at that. Less than a buck range yesterday. Less than a buck range the day before. But this thing is winding up
I was
here.
about to say, it's getting ready for some
Yeah.
action. One way or another, it's
Yeah.
getting ready for action because I never see First Solar, or any of the solar names for that matter, that
Yeah.
calm. So,
I think I'd go do the 54 put and the 58 call here, maybe going into earnings here, do a little bit of a strangle or something like
Maybe.
that, because it's not. They did a secondary too a while ago. Do you remember?
yeah, they did.
I don't
Let
know
me
if
pull out. I think that was in that stream of secondaries we got in the fall. I think it was in October, so I don't know if I'm gonna be able to pull it up real quickly.
While you're doing that, I just want to alert our traders just to a couple things we had discussed on the show here, and one of them was Apple and how the second time it announced this China Mobile deal that didn't get back up to the 575 level. Now you have you started drop into the gap area 561.77, getting a little bit of pop off that level. We'll see if it can get back up. I got a mid-range number here at 565.50. So that's if you're looking for perhaps a lower risk short in Apple, let's keep an eye on that 565.50 level. Also, we had talked about Tesla and how it regained half of that move from 194.50 down to 116.10. That 155 level was buffeted by that major resistance at 160. That was the high up on a gap day. And then if you go back much farther, you had 160 holding it as a support level, I believe, for almost 3 months when the stock was trying to make a move up to the $200 level. So there's a couple movers that we touched on earlier in the show.
Absolutely. I'm still looking back for that First Solar offering. I don't see exactly
Okay.
when it is, but yeah, I do hear what you mean there. And a lot of these solars we got to keep an eye on. I do want to kind of take a look at Trina Solar, which is another one we kind of look at when we have those moving nuts. Tango, Sandy, Lima, for those following along on your own. Not a whole lot of movement there too. Is that chart doing the same thing that the First Solar was, where it's kind of consolidating? Because it seems like it's moving right along with it.
Yeah, I think we're gonna try and get Rob Friesen on next week, and he, talks about a lot of these pairs here, and I'd be really interested to see, what kind of correlations. Yeah, Trina here, been treading, well, today and yesterday between the $13 level and 13.30 here, so consolidation in that, and then we might as well close up the solar discussion with Solar City.
Ooh, we
That
got the double whammy of Elon Musk and a solar stock.
Yeah, that's holding up. That chart's looking a lot better than the other two, but now it is starting to find resistance here at let's see, 58. Well, only hit 58.65 today. Hit 59 yesterday. So wall of resistance. Trying to keep the Solar City from running up to that $60 level.
Sure thing. Well, Joel, we got under a minute of the show left, and by under a minute, it looks like it's 9:45. So maybe give us the last thoughts on the S&Ps, and we can close out this week's broadcast.
Yeah, 1840. We hit that. That's the high. We traded right up there in the pre-market, and then we hit that again. So that's a round number. That's about the only thing you can say for that. 1840 is the only number in the book. Coming back on the downside here, we had 1836.50, the all-time high close. That's your first minor support point. Then you get down to the pre-market low at 1833 and a quarter. But that looks like it's gonna, be the parameters in the session today. If we do break above 1840, we've been having 12, 15-point ranges on the upside. That would take us dangerously close to that 1850 level. So, couple early trading parameters, and to close out the show on a little bit of a sad note, we have to say goodbye to our intern Chelsea, who's done an unreal job of uploading and listening to the show all over again. That's been a really tough job, and so she's the one uploading on those sites. So we want to thank her for her help and wish her good luck. And everyone have a good weekend. We'll be back with you on Monday.